So hello YouTube, I hope everyone is doing fantastic. It's CalFX here and I'm back with another one, another banger. So in today's video, I will quickly do a breakdown on, one of the biggest trades that I've ever caught, like concerning risk to reward ratio. This actually was a trade that I caught in October 12th, and it was New Zealand dollar, and it was a 1 to 232 risk to reward ratio, right? So of course, I mean, let me just give that disclaimer. Of course, I didn't double or triple my account. I think I only made like 10.5 or 11% overall on the whole trade, because I took majority of the profits while price was still somewhere around 1 to 9.3, something like that. And then I just left a little runner. Sometimes it can be just like a zero point 0.1 lot, but it's just for me to see how far price can go and see the possibility that there is for you to really make all that huge return on the investment. It's all in the psychology, right? So I mean, I gotta admit, I don't have that psychology yet to hold the trade all the way to 1 to 50 40 full volume, right? So but I'm gonna quickly break down this trade, and I'm gonna start from the higher time frame, because a lot of people asked how to merge the higher time frame, the medium time frame, all the way to lower time frame. So this video will be specifically for that. I'm going to explain what was my thought process behind the trade from higher time frame, medium time frame, all the way to lower time frame. All right. So before I get into the video, guys, let's subscribe, let's hit the like button, and let's get into the video. So when it comes to New Zealand dollar, I can quickly start just from the monthly time frame, so we can understand overall what was the high time frame intention on the pair. So looking at it from the monthly, we can clearly see that we had a break of structure right here at the left. Then we had a mitigation, then we had a break of structure, price comes back into the extremity of this previous high, and then starts to push all the way down into these lows right here. So the main idea was to see price continue to move down to take out this monthly previous low and just maintain the overall bearish order flow, right? So that's just looking at the monthly. So I drop down to the weekly time frame so we can understand what's going on within that monthly range. So on the monthly range, we see that we had this break of structure, then a pullback, a break. So this supply zone above, we had a supply zone that was left unmitigated. So that's why price used this as inducement to come to mitigate the unmitigated supply zone. Then we have a break, then mitigation, sweep of liquidity here, and then continuation to the downside. So my intention here was to see price continue all the way down, taking these weekly lows as well as the monthly low, right? So as far as we can see from the monthly, weekly up to this point, we've been able to establish our high time frame directional bias, which is bearish, right? So we drop down to the daily. So on the daily, what I saw is price was making, I mean, we can see price was pushing all the way down. It came into this daily supply zone, then continued to push all the way down. And we have this decisional last up candle before the down move. So if you look at this wick right here, this week actually signifies that this was the last point of buyer's exhaustion before sellers stepped into the market and pushed the candle all the way down to finally take out this daily/weekly swing previous low, right? So this basically was just price coming into this zone. We can see price came here and had this strong reaction, right? So because this actually is a very significant supply zone that was responsible for taking out this previous low, right? This previous low. So once price comes to my daily supply zone, I believe you guys already know, I like to see a 4-hour change of character, right? So when it comes to daily supply, I like to wait for 4-hour change of character before I drop down to medium time frame. So in this scenario, I dropped down to 4-hour time frame. So on the 4-hour, I mean, price quickly gave a beautiful change of character here. We can see we have this high, we have this low, and then this high. Then price comes all the way down, boom, gives us the 4-hour change of character to the downside. Now, once price, as I waited for price to return all the way into this supply zone, and I said, okay, once price comes to my 4-hour supply zone, I want to wait for medium time frame. Now, the reason why I don't drop I don't drop down to lower time frame right away is because most of the times the range of these points of interest are huge. Sometimes it can be like a 50, 100 pip range, right, of the order block. So for you to drop down to M1, you know, price still has a lot of room to breathe. So sometimes you're going to take a lot of losses before you ride. So I like to wait for price to show me the cards on the medium time frame. So once price comes to my 4-hour supply, I drop down to medium time frame. It can be M15, M20, or M30, right? So I wait for price to come back to medium time frame, and I want to see a change of character at least. That will be the first sign of bearish intention. So I come down, for example, to, I can use the M30 time frame. I believe it's much cleaner. So right here we are on the M30 time frame. So if I drag price right here, so this was the first tap into that 4-hour supply zone. So we can see we have this high, we have the low, then the high. So price gave an M15 or M30 change of character. So this right here would have been the supply zone. We had a nice reaction at first, but price didn't respect that supply zone. So I actually had missed the initial reaction here. I didn't look for anything at this point. I believe I was looking at other pairs as well. But price came into the supply zone right here. I mean, it didn't completely violate the M30 supply zone because it came and then it started to give a change of character. So we have a change of character. Price comes back, mitigates this last point of buyer's exhaustion. Seller stepped in, boom, take the low. So price comes back to mitigate this order block. Then we have a break of structure, price comes back, mitigate. So we can see right here the order flow shift that we have shifted from bullish to bearish, and we're seeing the mitigation. Price break structure comes back, break structure comes back. Then we have another break of structure right here. Price came back into this order block. So if I quickly come to M15, for example, we can refine to this wick right here. So this wick means that the buyers pushed up, then the sellers came in, pushed the candle all the way down to take out that swing low right there. So once price came back into the order block, that's when we drop down to medium time to lower time frame, right? So the medium time frame has shifted from bullish to bearish. Now we can drop down to lower time frame. This is how you take high probability setups, right? So once price came here, for example, you can say I just want to see a change of character. Price comes, we have the high, low, this high, then low, then high. Then we say, okay, we have a change of character right here. So this was the first break of structure into that medium time frame supply zone. Very important, guys. So we have this wick right here. So this is just part of of refinement trick. But when you have a wick like this that is higher than the previous candle's wick, that means that this was a liquidity sweep before price pushed all the way down to take out this low. So you could have refined to point of interest to this one right here, and you could have had the limit order right here. So you're taking the trade off the chalk. Price actually ended up pulling back, then broke structure. So use this high as inducement. So this could have been a nice liquidation right here, right? So price ended up liquidating that high into the supply zone and then boom, push to the downside. So this actually is one of the entries that I also teach, right? So this could have been the first entry, but I actually I believe I wasn't awake at this time right here because that was Frankfurt session. So I ended up coming in a little bit late during London session, right? So even if I drop down to 2 minutes time frame, you guys can clearly see we have a nice order block right here. The last up candle before the down move with this V-shaped recovery, and this could have been a beautiful, beautiful entry, right? So entry one right there, very valid. So because I missed the initial reaction at a medium time frame supply zone, I said, okay, I can still ride the bearish order flow, right? I can still take a trade as part of the continuation to the downside. So that means that I'm following the bearish order flow, even though price already has mitigated, has respected the supply zone. So that's when I got into this trade right here, this beautiful, beautiful, scenario right here. We had a break, price mitigated. So I said, okay, if I see another break of structure, I'm in. This is the system that we teach every single day on the mentorship. We take exactly the same trades, zero discretion, right? So once I saw this, I said, okay, I want my last confirmation. But for anyone that doesn't like to take the seconds, you can simply put a limit order here, stop loss above the last point of mitigation, and then a trade right here, 1 to 4, beautiful. You get in, you get out, right? So I ended up going to seconds time frame, so I managed to get a 1 pip stop loss, which is, you know, normal. When you go to 5 seconds time frame, 1 pip is huge, right? And my broker, New Zealand dollar, is 0.0 pip spread. So I had a 1 pip stop loss here. I ended up taking partial 1 to 9.3. That's when I took about 90% volume, and I left 10% running, 10% of the whole volume. So basically that 1 to 200, it didn't equate, you know, it didn't even get to 20% return, right? It was about 10%, something like that, right? So that was my entry right there at 659. But okay, right there we got tagged into the trade and immediately moved to break even once price had taken this low right here. I mean, this was just a management on the seconds time frame, and price didn't take that long to hit my, you know, TP right there, 1 to 9. That's when I took 90% volume off, and I just left the position running. But just targeting, for example, this previous 2 minutes low, that was a 1 to 10, right? So I mean, I just want you guys to see the possibility you have to make 10 times your risk in just a short period of time. I mean, from the entry all the way to the TP, it was just under 40 minutes that you could have hit a 1 to 10, right? So this is the power of this system that we use every single day. We do the same thing. So right here on the right, you guys have the trade. They actually sent this trade beforehand for the students of my group. So we all, you know, take the trades together. We win together, lose together, break even together. So right here, you guys have it. I actually sent the trade beforehand on the group. So price ended up coming all the way to 1 to 10. But then eventually I left 10% of the position running. Then I ended up taking 5%, cutting 5% off at 1 to 60. And then I just left like, I mean, I believe it was like 0.1 or 0.05 lots all the way to, you know, 1 to 200 and something. So if I go back, for example, let me just go back to 4 hour so I can show you what was the target behind the trade. So my target actually, it was, at first I wanted to see price coming all the way down into this previous low right here, right? I wanted to take out this 4 hour previous low right here. So that's when price, I mean, started to push all the way down right there, man. I mean, it was a beautiful trade right there. We can see the TP was hit at this particular point right here. It was about 1 to 135 risk to reward ratio. But I ended up closing the trade at 1 to 232. So it was somewhere 32 right here, right? So that's when I closed the trade right here. Once price came into this low right here, I closed the whole position. I mean, it basically was nothing. It was just 0.05 lots that was left. It wasn't really a big deal. So right here at the right, you guys have my MT5 to show that we walk the talk, right? We're not just talking, we got to walk that talk, guys. So I mean, it was a beautiful, beautiful trade before price ended up reversing all the way up, and you know, just took the remainder, ended up closing the remainder. So I mean, basically that was it, guys. I mean, as you guys were able to see here, we started from the monthly all the way to weekly, daily, 4 hour. So all of this is just higher time frame. Then we went down to medium time frame, which is M15. You can use M15, M20, or M30 before you go to lower time frame. So this is how you avoid being lost on the lower time frames. It's important to be patient, right? So I hope I made the point clear with this video, guys. If you guys enjoyed the video, just do me a favor, smash the like button, share this with a friend. Try to backtest this, right? And my contact is on the description box below. So anytime you want to talk to me, just to show, I mean, how, if you tried the system, you want to share with me how it went, feel free. My contact is on the description box below. If you're willing to join the mentorship, I mean, feel free. We're gonna take these trades together. There's more understanding, you know, behind this system. I go in deep detail, and you know, we can build a solid trading plan for each person according to your time availability. So feel free, you know, to chat with me anytime you want. And that's it, guys. I'm gonna see you guys in the next one. Peace.